APQ Global is a company that was listed on the International Stock Exchange in August of last year. Post-Brexit, pre-Trump, we had an opportunity to list this company, and the company was later admitted to the LSE AIM market. The mandate of the company is to provide its shareholders with sustainable, strong income coming from emerging markets. We're currently paying out a dividend of 6% per annum that is paid quarterly, and that comes from investments in emerging markets globally. That's Asia, Latin America, Africa, Middle East, Central Asia, and is unconstrained. We are not bound by any specific mandate. I think what makes our company unique is that by virtue of having an unconstrained mandate, we can really look carefully across sectors, across industries, across asset classes, and across countries on where we find the best risk reward to find the income for our shareholders. There are many funds that go after income in emerging markets, but they tend to also track an index and have the full benefit and drawback of the volatility of that index, but it does constrain them to specifically only get the income from that asset class, even if at a certain point in time that is not the most attractive one. I have been in emerging markets myself since the late 1990s. Started at Deutsche Bank actually just before the Russian default in August of 1998, and over the years have built out an extensive network of contacts locally in emerging markets, but also have worked along with colleagues. The colleagues I'm currently working for, I am working with them for at least 5 to 10 years. They are very experienced hands across all asset classes in emerging markets. And the International Advisory Council is a group of people, mainly from the days I was working at Morgan Stanley. They were all managing directors there, for those who were working with me then. And they bring tremendous expertise from Mazen Nomura, who's a Palestinian-Japanese gentleman who grew up in Jordan, to Alwada Al-Adawi, who is based in Dubai. They're people we've worked with for a long time. They're excellent sources of ideas for us in emerging markets, and they're also excellent sources of deal flow. We are right now in an environment which is actually quite unique. We are having a positive, synchronized global growth cycle. When you look at the G7, when you look at emerging markets, when you look at Asia, Europe, and the Americas, all economies on the whole, there are some exceptions, are doing quite well. At the same time, inflation, while picking up, is still quite subdued. So we're in an environment where, from a macroeconomic perspective, the volatility is quite low, and all the data that are coming out certainly support that picture to continue for the next couple of years. The reason I'm mentioning this is that emerging markets being 50% of the world economy, the flip side of that is obviously that the G7, the industrialized countries, are the other 50%. So having that stable anchor is very important. Within that global context, emerging markets by far continue to drive world growth. Their growth rates continue to be close to double of G7 rates. Admittedly, the latter have been quite subdued over the past 3 to 5 years, but their contribution to world GDP growth continue to be very significantly. We have had, obviously, a significant correction in commodity markets. That turned last year. That caused some havoc from a macroeconomic perspective, caused some havoc with the fiscal accounts in certain countries. But again, there the worst is behind us, and we continue to see a growth path for emerging markets, where undoubtedly, in my mind, they will continue to represent a growing share of world GDP. Countries that stand out, Brazil stands out, had very significant political troubles for 3-4 years. They're slowly coming out of that. They're slowly coming out of the slump on the commodity markets. They are a country which has experienced a disinflation trend, and the central bank is lowering interest rate. So again, it's a macroeconomic picture which is quite appealing. Nigeria is turning the corner. Very big country, very important country in Africa. And we see opportunities there, more on the fixed income side, more on the bank credit side, more on the local currency government debt side. But that's certainly a country that has a significant appeal to us. The Indonesian fixed income market is appealing. If you look at the macroeconomic and inflation trends there, we see good value there. So it's also, these countries also reflect our approach. This is not all the countries that you would find as the biggest representatives in the biggest indices, but of course that is of no relevance to us. We've achieved 3 milestones. The first milestone we've achieved is we quickly deployed the money we raised into the IPO. And that has worked quite well. Has also worked quite well in a period that was actually quite volatile, because immediately after the election of President Trump, emerging markets kind of took it on the chin and took a little bit of a dive, but we sort of avoided that volatility quite well. So we have established a balanced, what we believe to be well-designed portfolio to deliver on the objective of the dividend yield as well as modest capital growth on top of that. So that's the first achievement. The second achievement is we have paid out 3 dividends, one in January, April, and in August. And we have established a portfolio where the income embedded in the company is more than sufficient to cover the dividend yield. And then thirdly, in early September, we issued a 7-year convertible bond. It carries a coupon of 3.5% and has a quite decent asset cover, making it appealing for credit and fixed income investors who bought it in terms of the spread that it gives over government debt in the UK. And from our perspective, for the company, offers us attractive long-term financing, which is immediately accretive for the common shareholders in the company.